You're listening to A Book with Legs, a podcast presented by Smead Capital Management. At Smead Capital Management, we advise investors who play the long game. You can learn more at smeadcap.com or by calling your financial advisor.
Welcome to A Book with Legs podcast. I'm Cole Smead, CEO and Portfolio Manager here at Smead Capital Management. At our firm, we are readers, and we believe in the power of books to help shape informed investors. In this podcast, we speak to great authors about their writings. The late, great Charlie Munger prescribed using multiple mental models and analysis. We analyze their work through the lens of business, markets, and people. In this episode, we will discuss one of the truly most well-known tech investors and deal makers in the history of venture funding and public companies. Alok Sama is joining us to discuss his book, The Money Trap, Grand Fortunes and Lost Illusions Inside the Tech Bubble. To give our listeners a little background on our guest, he is a senior advisor at Warburg Pincus. He was formerly president and CFO of SoftBank Group International and chief strategy officer for SoftBank Group. Mr. Sama was a board member at Arm Holdings, Fortress Investment Group, SoFi, Brightstar, and Airtel Africa. He was also a senior managing director at Morgan Stanley, where he was involved in the communications practice in Europe and the TMT practice in Asia Pacific. More interestingly, outside of finance, he holds a Master of Fine Arts in Creative Writing from NYU, which is why I think you'll enjoy this book if you read it, and an MBA in Finance from the Wharton School. He also has a BA in Mathematics from St. Stephen's College. Alok, thank you for joining me today.
Thank you, Cole. Pleasure to be here. And I'm so glad to hear that you guys, when you approach investing, think about reading. And hopefully it's not just business books, because I think there's just so much you can learn from the world of fiction, from the world of literature that you can bring to bear on the world of finance.
Agree. And your background, I want to just kind of touch on your education.
Yeah.
I got the strong sense from your writing that you're a very well-educated person. Like when you're talking about Homer at one point in your book, I'm thinking this is not a traditional undergraduate person speaking in 2025. This is someone who is more classically educated. And I really think about, to your point, as investors or, say, what's the point of this podcast? I think of it as, as investors, we're learning to learn. And I think of your career, you learned a lot in different seasons through different people. And I think that's what we're doing as investors or business people.
Yeah, no, look, it's just talking about ancient Greece. This is simplistic, but I think probably the best lesson you can learn from Greek tragedy is the notion of hubris. And you know exactly what I'm talking about. Right? We've all been there, right? I mean, that's one of the things I'm kind of going all the way to the end of the book. But the notion, which Masa Son went through too, kind of that feeling of being infallible. We all know how that feels, particularly in market bubbles. And and there's just so much you can learn from people's experiences.
I agree. So you mentioned before that this was a memoir for you. What was it? Just that was it your writing in the past that made you say one day I'd love to write a book? What really drove you to tell this story?
Yeah, it's a great question. Let's just rewind. I grew up in India. I mean, I first came to the United States, kind of a classic immigrant story. So many Indians left our country in the 70s and the 80s when it really accelerated because there was just nothing going on. I mean, it was a socialist economy. And from my perspective, I loved reading, and there's kind of an alternate life where I might have actually become a writer, but it's just not something I could even think about. I mean, the notion of being an artist or being a writer, forget it. I mean, priority number 1, 2, 3 was go out and make a living. And you sure as heck don't come to the United States with the idea of doing anything but trying to make a living, right? I mean, you got to get a green card, you got to make a living.
Yeah.
So I kind of got thrown into this world of finance, and I kind of put aside, I had this closet ambition that I'd love to write, and it's one of those things kind of in my late 50s, and you go through that. It's a little bit cliched, but you know what I mean. I mean, when you're on your deathbed, you're never gonna kind of regret, kind of not having made that last million. But this bug about I really wanted to write, and I want to kind of get it out of my system. It's now or never. That's kind of what drove me, and I went to school. As you mentioned, I got my MFA, but the interesting thing about my MFA is I went to NYU at age 58. and spent 2 years in school and got my MFA. And I didn't think I would write this book. A lot of people assume I went to school with the objective of writing this book, and that's just not true
Sure.
at all. I thought I might write fiction. And as I was in there and I kind of in writing workshops, you share, there's an element of kind of throwing stuff at the wall and seeing what sticks. And
Yeah.
I think people found the idea of reading about my experiences, some of what I'd seen, to be compelling. And that was kind of the genesis of this book. And I kind of tried to put it all together as a story, and hopefully you agree that it reads like a story. There's a
Yeah.
narrative arc to my own life, and there's a narrative arc to kind of the parallel life of Masayoshi Son and his ups and downs, and how the two interweave and converge. And kind of that's the history behind my writing and this book. And now I'm working on a work of fiction. So that's kind of my next project.
Well, it's funny you mentioned fiction because there's elements of your book that it actually it sounds weird to say this, but the other book that I think of, like, I think I read your book in 2 days because once I picked it up, you were leaving all these very what I'll call personal breadcrumbs around the story, where you would you'd be telling of an event or a season in your life, and you'd be telling very personal things, and it was easy to relate and connect with your personal voice and your personal narrative. And it reminds me of a book where you can't really put it down because you're having so much fun reading. So I think you did that exquisitely.
Thank you.
You mentioned a little bit about your background. Let's just start with you much of your work, you talk about the deal making you do at SoftBank, but that was all teed up by your career at Morgan Stanley. So how did you end up at Morgan Stanley initially?
Yeah, I mean, it's actually quite simple. When I first came to the U.S., I was an immigrant. I was there on a student visa, and there were only a handful of firms that actually would hire people without green cards, people who weren't U.S. citizens. And
Sure.
no surprise, it turns out it was the top investment banks and it was the consultants, McKinsey, etc.
Sure.
Those just happened to be the most sought after jobs too. So that's how I kind of gravitate towards those jobs. But I do talk about this in my book. I knew nothing about finance coming to the United States, right? I mean,
Okay.
I might have heard of Bank of America or Citigroup because those are the only two that
Sure.
operated in India at the time. I'd never heard of JP Morgan or Morgan Stanley or Goldman Sachs, any of those big guns. And I describe in my book, in my first semester at the Wharton School in Philadelphia, I literally stumbled into this presentation only because everyone seemed to be going there. There was this buzz around the sky, and it was Michael Milken. And Milken was king of the hill back in the 80s, kind of Drexel. He was at Drexel. He wasn't CEO, but he kind of basically and
He was the profit center.
He owned the high yield market, right? He
Yeah.
absolutely. I mean, you're absolutely right. That was the profit engine at Drexel, and I just thought he was cool in the sense that I could relate to him, right? I mean, he
Sure.
was this nerdy Jewish kid, a little bit like me, kind of an underdog who did some research and discovered that investing in high yield bonds can outperform investing in traditional portfolios. A fairly basic insights on the back
Sure.
of that kind of created this mammoth junk bond market, which is kind of a parallel capital market that finances not just US companies, but emerging countries, and has become completely global in scope.
Sure. My dad first got into the investment business in 1980 at Drexel. So I grew up a
Okay.
Drexel kid.
Oh, really? Okay, cool.
And so it's funny you mentioned that because when I was doing Connie Brooks' book, Predator's Ball, there were elements of my childhood or interactions with, I've had people in my business career that were running into her book. And to your point, that was, I mean, it's weird for people. I'm 41 years old, just so you know, but it's weird for people to think about that in 1986, that was the most profitable private company in America.
Yeah.
And 3 years later, it was in bankruptcy court.
Yeah, it is quite a remarkable story. Again, go back to hubris. There were elements of that, right? I mean, you kind of become, Milken was, kind of we've all seen most people would have seen, you would hopefully remember it, that movie Wall Street. And, and that's exactly what it was like.
So, teach us how you initially met Nikesh. I just to give you a sense, I was aware of him when he was involved at SoftBank. When he first joined, I remember thinking, "Gosh, there's this entrepreneurial person that came in from Google, and he had actually bought stock in the open market. It's something we typically look at, and so it's like, gosh, this guy's here, and kind of looking at it from afar as an investor." And, it wasn't too long later that he was no longer in that process. And I always remember thinking, gosh, what happened there? I wonder what happened. And obviously your book tells a lot of that story, but how did you first meet him?
I met him. I was a banker in London. I was co-running the telecom and media practice for Europe, and Nikesh was a senior executive at T-Mobile, which is German phone company, still is.
Mm-hmm.
And one of my colleagues who was covering him kind of thought that just because we both happen to be Indian, kind of we might connect, and I pinged him and we got together and immediately liked each other. He wanted to, I mean, he was a absolute rock star. He knew he would move beyond T-Mobile. I knew he would move beyond T-Mobile. I helped him look at a few options, and
Sure.
eventually he ended up at Google, and we remained very good friends socially. I mean, and when he joined SoftBank, which was much later, 10 years later, more than 10 years later, actually,
Mm-hmm.
happened in 2014. He joined as the designated successor to Masayoshi Son. And he asked me to join him initially in a CFO role. And then obviously, as I tell the story of how he moved on. And so that's how I met him. And that's how I ended up at SoftBank.
Okay. So then what was your first interaction with Masa Son after that?
So Nikesh roped me in. Initially, it was to look at a couple of acquisitions, a Mexican phone company, if you can believe. That was the first deal I looked at. And then Nikesh and I started to get along. And I think what they were doing, SoftBank, that is, in terms of looking at the quality, the scale, and the breadth of deals, it was really very cool.
Okay.
And so DK said, "Look, I mean, I would love to have you join us full time. Go to Tokyo, meet with Masayoshi Son." And there's a chapter in my book where I describe my first meeting with Masa-san, and I found him to be, well, I liked him. I think in the grand scheme of things, particularly at that stage in life, that's as important as anything else. I mean, he was visionary in a very idiosyncratic way, right? I mean,
Sure.
he was an idealist, and a lot of people talk about that. I mean, even if now when you go look at SoftBank's website, their corporate mission is happiness for everyone, which
Yeah.
sounds a little bit weird, almost
Yeah.
something you might see on a Disneyland billboard or something. But
Yeah.
he really believed in that. I mean, kind of it was his belief in technology as a force for positive change. The enthusiasm was almost childlike. The belief was almost childlike, and it was very appealing. And he's a brilliant man, a visionary, great track record of calling the mega trends in the world, the technology, the internet, smartphones, and I was drawn to it. I mean, it was. I just thought I'd have fun hanging out with him.
Yeah. Let's see. One of your chapters is the Mike Posner song "I Took a Pill in Ibiza," which
Yeah,
is very comical. Again, back to the human part of your book. I just really,
yeah,
it
yeah.
really, you were never short on unique experiences, and you kind of tell a lot of stories about your experiences, or you're kind of like, "Ha ha, look how silly I was at that age,"
Yeah.
or what I knew. You told the story of your first big bonus check. Can you tell us what you did with that first big bonus check? Because we've all had that first big check where you actually feel like you did something.
Well, actually, it's the opposite. It was more like not. I mean, it was $190,000. I get quite
Okay.
specific about that, which was kind of,
You remember it.
Well, of course, how can I forget it? It was more money than like kind of 10 generations of Samas had made in India, right? I mean,
Yeah.
those numbers are insane, man. I mean, and I remember going out and buying my wife a bracelet from Bulgari, and I bought myself, Saks Fifth Avenue, which was we were in the Rockefeller Center. It was a This is the original Saks Fifth Avenue on Fifth Avenue,
Yep.
and they had a 5 for 1 shades on custom special you get 6 for the price of 5.
Okay.
So so buy 5 get 1 free promotion, and I kind of bought myself kind of 6 these 6 custom made two-tone, kind of, I'm sure I look ridiculous,
Yeah.
inspired by Michael Douglas in Wall Street. So that's what I did with my first bonus check.
But by the way, and I think you commented on the Bulgari bracelet. I think you made a comment like, did your wife ever wear it? Or
No,
did
she
you just...
never wore it. She thought it was silly. I mean, I would buy her these trinkets and she never wore them.
Your wife
I
reminds
think-
me a lot of mine, by the way. When I read that, I was like, gosh, that's his wife's like mine. I could do something. She'd be like, nah, it's just not my style. Sorry.
Well, yeah, it was more like, I'd prefer it if you did the dishes.
Yeah,
Yeah,
that's so
yes.
funny. So let's see. So you mentioned this kind of briefly, but Nikesh brought you in to SoftBank. You did some initial consulting for him, and then he wanted to bring you in as an employee and kind of a senior person to their team. Teach us what it was like to get to know Ron Fisher, who is really kind of Masa's number 2.
Yeah, Masa was vice chairman, and he was, kind of on the face of it, really easygoing, laid back, but an absolutely brilliant man. And he was, after Nikesh, the first senior person I met at SoftBank, and I really, really liked him too. So a combination of meeting with Ron Fisher, very personable, someone I'd want to hang out with, and he was older. He was almost 70, but I used the line in that book, and I really searched for the right line to describe how I felt about him. I think the line I used is, he was one of those people, if you were around him, it made you less afraid of aging. And that's the best way I can describe how he made me feel. Because he was just a happy, positive person, and really brilliant, hardworking, and it was cool to work with him. And then, of course, I met Masa, who was inspiring in a very different way.
Sure.
And a combination of meeting those two individuals is a lot of what drew me to SoftBank.
Sure. You had a phrase you used in describing one of Masa's early strategies. You called it his time machine management strategy.
Yeah.
Can you explain what you mean by that? Because when I think of early SoftBank or early Masa, I think of this as being like kind of his easy ARB in a way, if that makes sense.
Yeah, no, I think that's an interesting way to describe it, and I think it's accurate. So what I was referring to is it was a key component of his strategy, which is when he looked at emerging markets, and India is a great example, China is another example. The idea of a time machine was simply taking business models, technology business models that have worked in the Western world, and transplanting them into emerging markets like India. And you'd always need to tweak those models for local conditions, but it was literally as simple as that. And allied to the notion of a time machine was the idea of leapfrogging. And what do I mean by leapfrogging? Well, take e-commerce, for example. In the United States, you've got an embedded mall culture, right? I mean, that's what people like to go to. Wean them away from that into shopping,
Sure.
on digital shopping to shopping online is a shift. Whereas in India, you really don't have organized retail at all. So these technology mega trend, there's no kind of change in behavior pattern involved. As economic prosperity steps in, middle class has greater propensity to spend, you naturally gravitate towards spending online, right? So as a result, e-commerce spending is a proportion of total retail is a much, much higher proportion in India and China, even now, than it is in the United States. So a combination of time machine, taking business models that work in the US, transplanting them, and then those models take off even more powerfully than they do in the US, leapfrogging, because there's less impediments, there's less of a behavioral change at the consumer level that's required for those business models to take hold. So that's a lot of what drove his bet on Alibaba, for example. I mean, he ended up making $73 billion realized profit on Alibaba, and a lot of what drove his bets on emerging markets like India.
Hi, I'm Cole Smead, CEO and Portfolio Manager here at Smead Capital Management and host of this podcast. If you enjoy this podcast, I'd like to invite you to check out SmeadCap.com. At our firm, we are stock market investors. We advise investors who play the long game, with a discipline that has proven success over long periods of time. Learn more about our funds at smeadcap.com. Past performance is not indicative of future results. Investing involves risks, including loss of principal. Please refer to the prospectus for important information about the investment company, including objectives, risks, charges, and expenses. Read and consider it carefully before investing. Smead Funds distributed by Smead Funds Distributors, LLC, not affiliated. This is the part of the book that you were talking about your first time going to see Masa in Tokyo. You reference one of the most stereotypical movies of experiencing Tokyo, which is obviously the movie Lost in Translation.
Lost in Translation.
Yeah,
exactly.
Starring Bill Murray and Scarlett Johansson, a young Scarlett Johansson and an ugly Bill Murray as usual. But so it's funny. So I had just gone to Tokyo for the first time from a business perspective. You had obviously been there as a banker, numerous times. I'm a big baseball fan, and we'll get into the baseball conversation later because I love that story too. But I land there, first time there. I can't remember where I was staying. I was staying at some nice hotel, really central there in Tokyo, and obviously the Yomiuri Giants are playing that afternoon on Sunday, and so I thought, maybe I'll go up to the game. I don't end up going to it, but obviously the baseball culture is very big there, and some people think, that's very American. But at the same time, the Nippon Baseball League, I think you can have a max of like 2 or 3 foreigners on the baseball team. Yeah. Can you speak to the homogenous nature that you experience as a business person? And also, you were a very senior person at SoftBank, and yet it seems that you walk away with that too, much like everybody else has.
Well, my early visits to Tokyo were short business trips, initially from New York. And then from Hong Kong, and that was your classic, kind of the Bill Murray captured it wonderfully, right? I mean, through that haze of jet lag, you're kind of in this complete alien land, and the disorientation is, I hated it, to be quite honest. And then I go in, and actually, even before I joined SoftBank, we did a 1-week family holiday, and it happened to be cherry blossom season. And I absolutely loved it, right? So, all that negativity was a function of kind of, in and out, never really experiencing the culture, et cetera, et cetera. And then, when you're looking at Tokyo, when you're going to restaurants, and I describe how I walked through Ginza, and we walked into this store, sort of the equivalent of Tiffany's in Ginza, which is the main shopping area in Tokyo. And when you're with Masayoshi Son, it was, I don't know if there's a parallel, right? I mean, it's kind of, maybe it's a little bit like walking with Donald Trump into Tiffany's, but let's face it, Masa Son is a lot more popular than Donald Trump might be in New York and elsewhere. He's polarizing, and Masa was just universally popular, and to go in with the richest and one of the most popular. By the way, in terms of measuring popularity, Masa at the time had more Twitter followers. Back when Twitter X was known as Twitter, he had more Twitter followers than the Prime Minister of Japan, right? So. You're going in with someone who's the richest man in the country, a bit of a cult figure. That was seriously, seriously cool. I mean, if he went out for dinner, the restaurant would help you out.
If he'd say like, why don't you get your wife something? And it's almost like the king is saying, you should do this. And you're like, well,
absolutely.
Who am I to say no?
And the irony of like richest man, if not the richest, certainly the second, certainly one of the richest people in the world, doesn't matter, kind of surrounding error after 10 billion, who's counting. The irony of the store manager telling me that because you've come in with Son, we're going to give you a discount. I thought that was kind of cute.
That's awesome. Let's see. So when you're talking about Masa as an idealist, the other thing that you talked about in your book and he talks about is the idea of being crazy. And people think of that as like a negative thing. And Masa, there's a craze in a way that Masa looks at as a brilliant and really kind of driven phenomena. Can you explain the idea of crazy to Masa?
Yeah. So there's 2 elements to crazy. One is plain and simple, kind of the idea of living in the future, right? If you're living in the future, back in 2014, I talk about this. He would talk about singularity, and he would talk about empathetic robots and the Internet of Things. In his mind, as we sit here today with self-driving cars and AI and Chat
Yeah.
GPT, etc., it's a reality. But this is 2014. In his mind, this was a done deal. He was living in that future, right? And when you're living in that future and you're talking about, kind of robots with emotional engines and agentic AI, he was talking about all of those things. And when you do that, people are going to think you're a little bit crazy. When you
Yeah.
talk about, we start making giant bets kind of based on convictions like that. But there's a second element of that, which is almost kind of Machiavellian, which is really clever, which is, and there's elements of Donald Trump there, which is very interesting, which
Yeah.
is let the world think you're crazy. And when you come along, you're this crazy guy with this big checkbook, nobody messes with you.
Yeah.
Right. So I gave the example where the first deals I did was a Uber competitor in India. And back then, there were two local competitors to India. When Masa Son got behind one of them, in this case, it was Ola Cabs, the second one folded because who's going to mess with this crazy guy? Right. So I think letting people believe that you're not just powerful in the sense that you've got this capital cannon behind you, but that you're a little bit crazy, that you might act a little bit irrationally. Nobody wants to mess with you. And in a business context, sometimes that could be a real competitive weapon.
Well, I think you mentioned, because you were looking at it as like, why would someone want a negative revenue business? But to your point, it was more about the strategy in that case than it was about the business per
Well,
se.
you can't really. I mean, I had a fairly conventional upbringing in as much as, Wharton MBA, so
Yeah.
schooled in conventional finance,
Yeah.
discounted cash flows, Wall Street, same thing, kind of building big LBO models,
Mm-hmm.
valuation models, looking at comps. You kind of need to throw a lot of that out the window when it comes to technology investing. Right.
Sure.
Because, I kind of did the numbers on, you did the early days, you did the numbers on Uber, and you could quickly conclude, I mean, I did, that these businesses were worthless. I mean, they were just bleeding money, right? And but then I had this conversation with Masa, and his perspective was, look, I mean, you got to look out 10 years in the future because you're really buying into a platform. And take ride hailing, for example. Imagine a world with autonomous cars. We're here now, by the way.
Yeah.
But again, these conversations were 10 years ago. Imagine a world with autonomous cars where, kind of what's the biggest single leakage in the Uber business model? Well, when you and I, any of your listeners, when you take an Uber, you spend, say, $10, $7 goes to the driver. Well, in an
Yeah.
autonomous cars, there is no driver, right? Now,
Yeah.
you can't even begin to model that because who's going to own these autonomous cars? What are the economics of that? And you very quickly realize that, forget it, forget the numbers. This is a bet on a future, which is going to be very different, and on an entrepreneur who I think will execute and will position the company so that it becomes center of that futuristic ecosystem.
Sure.
And that's what those bets were all about.
Yeah, it's funny. We have obviously we have driverless cars all around the valley here. With Waymo, and
Yep.
so to your point, I always tell people. And here's the weird thing: I think a lot of people get caught up in say like the electric engine versus combustion debate on cars. I think that's a waste of time. To your point, it's the technology of ease and convenience and freedom is what I'd call it. And I mean, in full disclosure, I send my daughters that do not yet drive to the mall in a Waymo.
Yeah.
Because why not? Like, I'm a very expensive taxi driver, in effect. And to your point, that was something that wasn't possible. Let me ask you this. So you talk about the idea of blitzscaling. And again, you pepper really good kind of, I'll call it technology strategy ideas or financing ideas throughout your book. In blitzscaling, is part of the reason why we never saw blitzscaling on some of these levels do you think it has anything to do with the cheaper cost of money, or in effect, you're only as good as your last ability to raise capital in some cases, as we've seen through history? Do you think that the ability to raise capital is a dominant feature of blitzscaling?
It absolutely is, but let's be careful about choice of words. Reid Hoffman, kind of celebrated venture capitalist behind
Sure.
LinkedIn, many other companies. He's the one who introduced that term into the vernacular. And blitzscaling works wonderfully in the context of platform business models, right?
Okay.
Where you have I'm sure most people are familiar with the idea of network effects, which is
Mm-hmm.
the more people get on a platform, the more valuable it becomes, right? I mean, early days, your reason to get on Facebook was, well, everyone was getting on Facebook. And as more and more people get on, you got to be there too. And that becomes a reason for people to advertise on Facebook, and more people get on, et cetera, et cetera. Kind of
Sure.
that's the flywheel. Same thing with Amazon or Google or Uber for that matter. Uber, another great example, which is kind of more people get on, that attracts drivers. If there are more drivers, and wait times go down, and more people get on, and so on and so forth. So
Yep.
I think there is a winner take all aspect to these platform business models, and blitzscaling is the only way to go. Now, blitzscaling works less well for capital intensive business models, right?
Okay.
So, we in my book, we talk about the counterexample, which is WeWork, which did not work out very well, because
Yeah.
WeWork is not only is it not a it certainly isn't a platform business model. It's not even a technology business model, because the economics are local, right? They're hyper local. I mean, if you're in a place like New York City, the economics of literally, varies by block. Even within the block varies by building, right? I mean, there's so many factors that come into play.
Yeah.
So blitzscaling is not a good idea. You got to be really, really efficient about how you deploy capital, and that's one of the many things you learn along the way when you're in the world of technology. So but coming back to the point you made, capital is, you look at what's going on with AI now, and how quickly people are scaling, and certainly for someone like an OpenAI, the need to invest, even overinvest in processing capacity, and again, virtuous circle. The more you're investing in capacity, the more people on the network, your models get better, etc. Again, same flywheel, right? But
Sure.
in this case, it's really capital intensive. So even in that case, capital is a competitive advantage. It's absolutely crucial, and that I would argue even more than a lot of the other business models.
Sure. I really like what you're saying, and I got a tangent real quick with you, because you're on a topic that I just think is super important. So, and I'm actually working on a piece on exactly what you said. So, we've crossed the Rubicon, I would argue. To your
Yeah.
point, we've gone from OpEx tech, what I'll call asset light, to
Yeah.
CapEx tech. And those are vastly different outcomes, volatility, variables, et cetera. And the markets are still treating it as an asset light story, because the idea is that there'll be so much volume that it will become asset light based on volume per se. But to your point, so what I've tried to look at is ask, is there a paradigm that we can use that to compare this? Because to your point, I mean, I think Meta's going to be borrowing money by the end of the year because they're running out of cash on this. To your point, right? There's going to be a lot of off balance sheet financing, and so the idea I'm working on is, if you look at Berkshire Hathaway, which obviously is not a tech company, but Buffett went from being an asset light investor, right? He wanted businesses that didn't need any capital, which is a very asset light idea, to he had so much capital, he had to eventually buy capital intensive businesses, which were utilities first, and then ultimately the railroad business. And if you look at the returns of Berkshire since then, they're serially lower. They cannot be what they were in the past.
Yeah.
And I think what the market is doing is treating this as though the returns are going to be as good or better than they were in the past, when just the transition from, to your point, asset light to capital intensive guarantees serially lower returns. And so I'm calling it the market's Berkshire-sized problem, which is a weird analogy.
Yeah, no. Look, I mean, I think I think you're absolutely spot on. I think an interesting parallel is what happened with telecom infrastructure, with the build out of fiber optic networks in the year 2000,
Yeah.
right? I mean, I think you could say that AI is next big industrial revolution. Got to keep investing. It's going to change our lives. And you can still have a major disaster on your hands with respect to excess capacity. Both those statements are completely, totally consistent. And that's exactly what happened in the year 2000, which is all the hype, every company is an internet company, ubiquitous broadband, people build capacity, massive capacity, but guess what? They overbuilt. A lot of them went bankrupt. There's Global Crossing, many other examples.
The utilities
right?
businesses that got into it too, they a lot of those went BK. Montana Power and Light building out broadband, for example, right?
Yeah, well, yeah, exactly. It was overdone, right? So, and you're going to have, it's possible, maybe even likely, that you're going to have an element of that. So I'm a huge believer in NVIDIA, for example. I mean, kind of talk about a company that's got awesome, kind of competitive moats, is an absolute tear. Everyone uses NVIDIA. There is no alternative. But I think that somewhere down there, and I can't predict whether it's next quarter or a quarter, 3 years down the road, there's going to be a major hiccup because the hyperscalers are going to realize that, okay, we've been in land grab mode, but we might be a little bit ahead of our time. Even in OpenAI, the early verdict on ChatGPT is it's not incrementally relative to GPT-4. I'm talking about ChatGPT-5, sorry. Relative to GPT-4, is the incremental CapEx really worth it? In other words, classic case of diminishing returns. And to your point about, is it really efficient to keep deploying capital in that fashion? At some point, you're going to hit it, right? And I think there will be a major hiccup and a major reset to valuations, but that's not to suggest that, kind of as a macro trend, as a technology macro trend, as a margin expansion productivity tool, it's revolutionary. Both those statements are completely consistent.
Well, I agree, and to just to use an example of where I think AI does really superb things. So on that idea I've been working on, obviously I wanted to think a lot about the railroads of Berkshire. So I went to Grok 4, I think it is now, and I said, hey, I want you to give me every reference to railroads from the Berkshire meetings that come from, like, say, CNBC.com, is archived a lot of those. And then I asked for any railroad reference in the shareholder letters. And then I asked for any railroad reference, even in any public interview Charlie or him did. Right. And just the voluminous nature of the data I can get back on short order is incredible. But again, I'm asking it a very particular question, which I think, to your point, it's a wonderful tool. It's like the best hammer you've ever had. Yeah. But if you don't know how to use a hammer, it's not going to be any good to you.
Absolutely.
Let me pivot a little bit, more lighthearted. You mentioned a story about Vijay Singh, okay? And he was talking about the idea of pressure. You guys were talking about pressure, and he kind of laughed at your idea of pressure. The reason why I wanted to bring this up is because Vijay comes every November here to Phoenix to play at the Schwab Cup in the Champions Tour, and he comes to my home course, so I have a lot of affinity for seeing Vijay every November. What did he explain was as real pressure in his world?
Wow, real pressure, it's a bit of a cliche, but I think most people would have heard this joke. The real pressure, Vijay, his background, as you know, was driving range pro out in an island of Fiji in the middle of nowhere. Yeah. And, I asked him in the context of going up, Vijay, that is, going head to head against Tiger Woods when Tiger was at his best. And the wonderful thing about Vijay, I mean, if you followed him, you know this, he is the only player who did go head to head against Vijay and won, right? I mean, he was the number 1 ranked player in the world when Tiger was at his best, which is seriously cool. And I asked him about that, and he said, he just laughed. He said, look, pressure was when I was hustling tourists for $100 a hole with $20 in my pocket, right? That was pressure. So, I mean, it's people's Masa, by the way, his risk tolerance. It's an interesting case study in risk tolerance, right? Yeah. I mean, a lot of people think of Masa as this kind of inveterate, even reckless risk taker. I kind of have a different view, because if you live in the future, as Masayoshi Son does, he's kind of reading tomorrow's headlines, right? Sure. And if you're reading tomorrow's headlines, it's not that racy to make a leverage bet on pretty much anything, right? Sure. So with Masa, it's this almost crazy conviction about what the future looks like, as opposed to gambling. That's what drives it.
We hope you're enjoying the podcast. We work hard putting together this show, but we work even harder for our investors at Smead Capital Management. At Smead, we believe in disciplined investing, which is why the Smead funds have a proven track record of long-term outperformance. If you're an investor who plays the long game and want to invest in wonderful companies to build wealth, we invite you to visit smeadcap.com. Past performance is not indicative of future results. Investing involves risks, including loss of principal. Please refer to the prospectus for important information about the investment company, including objectives, risks, charges, and expenses. Read and consider it carefully before investing. Smead Funds distributed by Smead Funds Distributors, LLC, not affiliated. You mentioned some stuff about Joe Tsai that I had never heard. Okay, I know who Joe Tsai is, obviously, but you made a comment that's a very East Coast comment, and as a West Coast kid, I'm born and raised in Seattle. I live in Phoenix now. You said something that most West Coasters might not totally understand, so I want to make sure we're all in the Komodo and we're all in the tent on this one. What is it? When talking about Joe Tsai, you commented that he had a Mayflower descent. That makes sense to East Coasters, but can you bring a West Coaster up to speed on what that means?
Oh yeah, I mean, I was talking about his educational background, right? I mean, kind of the so-called Boston Brahmins. I mean, kind of the East Coast elite. You associate them with Andover and Exeter and Harvard and Yale, right? I mean, it was like everyone did that, right?
Yeah.
And it was a little bit like that with Joe Tsai. I mean, he was a Yale man through and through, and he played the ultimate preppy sport, lacrosse.
Yeah.
Right? So that's kind of as preppy as it gets. And you don't necessarily associate that with someone who came from Taiwan originally. And obviously he's gone on to now own the Brooklyn Nets. And by the way, rewind, some of your listeners may not know this, but Joe Tsai is the chairman of Alibaba, and along with Jack Ma was the co-founder of Alibaba.
Yeah. So when you said that, I had like flashbacks to like playing at some nice East Coast golf club and asking like, well, how does someone become a member here? And the response is, well, did you come over on the Mayflower?
Yeah,
right?
Exactly.
That was the easiest way to do it. Yeah. Let me pivot on. This is a really personal part of your story, and I think it's an incredible part of the story. I think it's a very endearing part of it. But you talk about your mom. Teach our listeners, what was her background? What was her education? What did she do for a living? And then, she ultimately gave that up for you. And you talk about that for our listeners.
Yeah, I mean, I wouldn't say she gave it up for me per se, but both my parents were doctors, and you're right, in as much as my mother, after she was a student when she had me, she got married very young. She was only 22 at the time, and she was in medical school. My father was a professor, and they got married, and she had me very early. Literally 9 months exactly. I mean, you could not make this up. They got married February 28th. I was born November 30th, literally to the day. And then very quickly, she had my brother, and she had to actually drop out of medical school and to spend time with us, to bring us up. We couldn't afford help, not quality help anyway. And so, yeah, she made her sacrifices. She eventually did go back to medical school and complete her MBA, and she had quite a distinguished career as a doctor herself. So both my parents made sacrifices. My father was an academic, and we made nothing. We lived in government housing, did not have air conditioning, did not own a car. And my father went on to become a very prosperous physician. But my early memories of the sacrifices they made was, that sticks in your mind, and you kind of determined that even though I had a very happy childhood, you kind of become very determined that I'm never going to put myself in a position where I feel that my kids are, kind of not getting their dose of protein in a day, right? A lot of things that you just completely take for granted.
Yeah. Well, I always tell my kids the definition of love is, giving something to someone that they don't deserve. That's the definition of love. And to your point, that's a good picture of what your mom did for you and your brother. And it's a great story you tell of her. Okay, so personal question, because again, I don't know if I totally got this out of the book, and I don't know if you maybe have the right answer to it. Okay, so do you consider yourself an American, or an Indian, or a foreigner or a person of Indian origin, or an overseas citizen of India?
I'll make it even more confusing for you. Actually,
Okay.
the only passport I carry is actually a British passport.
That's hysterical. Yeah, and I don't ask it flippantly. I was like, okay, if I'm getting his story and really understanding him, it's somewhere in the stratosphere in between all these things that, because your experiences. And I think somewhat about this, I was born and raised in Seattle. I now live in Phoenix, Arizona, and I really identify with Phoenix a lot. It's not the different country, but it's a very different culture and different people group, I would argue. And so as you were going through a lot of your background and your experiences, I was like, man, I mean, he has been every which way, and you're kind of a chameleon. Is how I looked at you.
No, I think that's you touch on something very, very interesting, and it's actually a theme that I want to explore in my next book. I think this issue of immigrant identity, particularly immigrant identity in the United States, is fascinating, and these are interesting times. I wrote a piece that got a lot of traction globally, actually, in the Sunday Times, and that was driven by the backlash against the appointment of a friend of mine who was Indian as Trump's AI czar. And, kind of a lot of people raise the issue, why do we need someone like that in an important role like that? I think these are very interesting questions, kind of to what degree do you have to assimilate? Some of my friends have assimilated. They've become completely Americans, others less so. And I think the way you characterize me, chameleon, is appropriate. I mean, I've kind of first 21 years of my life, I lived in New Delhi, and then I came to the United States, to Philadelphia, to go to business school. Then I lived in New York for a long time, and then I moved to Asia, to Hong Kong, and then I moved to London and carry a British passport. I had to give up my Indian passport, which was quite traumatic. I described that in my book. But even though I am an overseas citizen of India, I go back to India, and it's like resetting the clock. Like in my case, literally 30 years. I mean, it's like
Yeah.
I never left. It. It gets complicated. I mean, I was on a podcast in Delhi, and I kind of felt almost humiliated that even though Hindi is my mother tongue, because I don't speak in Hindi that often,
Mm-hmm.
kind of struggled speaking in Hindi in the context of a conversation like this, and that's a bit of an uncomfortable feeling. So
Sure.
you got to change, but you kind of wonder how much you've changed. It's a constant struggle. I don't have very few people have clear, crisp answers, and if they do, they're usually not being completely honest to kind of this "where are you from" question.
Sure. Or they're not contemplating it deeply enough, to your point.
Yeah.
Yeah, and I say that because, I mean, I work in the investment business on the West Coast, which means you get up early, you go to bed early. And to your point, it's I'm as likely to get together with a friend halfway across the country, or if they happen to be somewhere else in the world at the time, as I am anywhere else. So I think a lot about that is like, we all have unique experiences, and yours reminded me a lot of an experience that it's just very hard to capture and stereotype or put in a bucket or anything like that. Let's see, you were skeptical of the variable, the VIE structure, the variable interest entity structure of Alibaba. Investors weren't necessarily then, but you kind of brought up, some obvious possible issues with it. How do you look at that now? It seems like in the China-U.S. debate, that became a little more of a formative discussion. How do you think that's all weighing out?
Well, look, I mean, I own Alibaba stock, by the way, so I don't want to overplay my concerns about that. But one of the things you become aware of when you've lived through 2008, for example, is this extraordinarily powerful notion of tail risk, right? And if you're in the investment business, you know exactly what I'm talking about.
Yeah.
And to me, something as untested as a VIE, that's tail risk for you. I mean, it's a Six Sigma event, but there is a scenario where the Chinese decide, and they came pretty darn close to turning their backs on capitalism a few years ago, right? I mean, you
Yeah.
look at Didi. I mean, I bought Didi stock at $12, and it went all the way to $2, and kind of again, it was a function of the management team kind of being a little bit too outspoken. I think that happened with Jack Ma at Alibaba.
Yeah.
And you look at, he disappeared. It's still a mystery. Where did he go? Right? I mean,
Yeah.
those things happen in China. My days at Morgan Stanley, we were asked to create a competitor to China Telecom. China Telecom being the equivalent at the time, it was a monopoly,
Yeah.
because AT&T, Verizon rolled up into one, and it was literally a case of, okay, we'll give you this license, we'll give you that license, we'll take managers out of there, and you kind of realize that, kind of, if you're creating a business, if it's that easy, I'm gonna all mandate it. There are no entrepreneurs at work. There's no conflicts, and if it's that easy to put together, it's equally easy for that to be dismantled. And
Sure.
so you become sensitized to that. So I kind of made that comment in the context of tail risk, right? So if you're
Sure.
a public company like SoftBank, basic principles of diversification, kind of, if you're a $100 billion company, and kind of 70-80% of your market cap, your NAV, net asset value, there's leverage in there too, is one single stock, and there's tail risk associated with that. It's something you got to think about. That's the context of which I brought that up.
Yeah. So you also talk about the Boy Schiller hit on Nikesh. Can you just, obviously that came as a shock to you and Nikesh and anybody else, but I guess, as you look at that whole story, like, what's your post-mortem on that? Who do you, was that just planted in effect to get Nikesh out of SoftBank, and that's kind of the summation of that story?
Well, they targeted me, and in many respects, the manner in which they targeted me was even worse. I mean, the book starts off with, and if you read it, you know this, obviously, that the book starts off with me meeting Claridge's Hotel in Mayfair, right? I
Yeah.
mean, kind of as blue chip, as marquee as it gets, sort of the equivalent of the Plaza in Manhattan, if those of you might be familiar with. And I'm meeting with two Mossad agents in the lobby, and they kind of, tried they want $1 million success fee to tell me who's behind this. So I think the point of telling that story was twofold. One is it's experiential. It was very scary for me.
Yeah.
And it's impossible to write a memoir, an honest memoir, without kind of going through what that feel like. And I think what people ought to take away from that is, if you're going to be in this world, power, money, you better toughen up, right? People do stuff like that. Scary stuff happens. So corporate espionage, honey traps, as ridiculous as that sound, attempted sexual blackmail, that's the stuff that goes down in this world. And it seems comical, and I can look back and kind of laugh at it now. But man, having lived through that, it was scary.
It's funny when you tell the honey trap story, I actually thought of the setting in Lost in Translation, that Bill Murray's like having his Suntory whiskey drink at the bar. And that was what I visioned in my mind as you're telling that story. And, to your point, I mean, there's been other stories that have gone out there like that. But, when you're reading this from a corporate perspective, I mean, there's a reason why someone's coming after you. It is for corporate reasons, which is, again, to your point, it's a very messy and confusing world.
It is. It can be. It certainly can be. Yeah.
Yeah. Let's see. The other story you tell that I thought was brilliant. This is like one of those Masa touches that I thought was incredible. There's been a lot of Musk fans, and kind of like Tesla is like more than just a company. It's kind of like an identity to some people. Can you tell people how Masa created the identity of HawkBonds? Because I thought this was very interesting from an investor, but also a business perspective.
Oh yeah, I mean, that was actually an absolutely brilliant idea, and I'm so glad you brought this up. So SoftBank Hawks was Japan has a World Series, and the SoftBank Hawks were world champions, if I'm not mistaken, 3 years in a row, right? And they won the Japanese World Series, and the Fukuoka Hawks. Fukuoka is Masa's hometown. Again, cult following. A little bit like pick your favorite team. Kind of the New York Yankees, whatever, it doesn't matter. But you know what I'm talking about. So the idea was, he called domestic corporate bonds. And SoftBank, by the way, globally still is rated below investment grade. I think in Japan, the local yen rating is investment grade. But no matter, they call their bonds, SoftBank that is, they call their bonds Hawks bonds, right? And because they were called Hawks bonds, people lapped them up, and were willing to accept an interest rate that was based on companies of comparable credit quality. You would consider that to be substantially below market. And on the back of that, SoftBank became, I'm not sure if it still is, the biggest issuer of corporate bonds in the Japanese market, which I think is a really interesting story because
Yeah.
not only is Masa a great technologist, he's a financial engineer and a remarkable I mean, Vision Fund is remarkably astute too in terms of the engineering that went behind it. But the Hawks bonds is a great example of that.
Yeah. You talk about ARM, it was bought on the idea of the IoT or Internet of Things. That was like the old buzzword, if you will.
Yeah.
Now people are bullish on it because of what AI can do, to some of our discussion earlier. From your banking experience, and this is kind of like the idea that I wanted to get at, is how important are stories? Numbers don't sell stocks, is the old saying. Stories do.
Yeah. Yeah.
Is that what most of these buzzwords really carry, is a storyline that people can attach to?
Yeah, narratives versus numbers, right? I mean,
Yeah.
I think narratives rule in a market bubble, and they certainly ruled, kind of at the height of the internet when people you could give me, I mean, you and I give us any story, and we can come up with a set of numbers to fit the story, right? We know
Yeah.
we know how to do that, right? So narratives rule in bull markets, and I think that's happening with AI right now.
Okay.
Fortunately, with the internet bubble, it was happening in the public markets. And a lot of people got very badly hurt, including, ironically, Masayoshi Son, who went from being the richest man in the world to, Guinness Book of World Records, the man who lost the most money ever.
Mm-hmm.
Now, where the narrative is kind of run amok is when it comes to AI, but it's more in the private space, right?
Yeah.
I mean, where it's a case of, kind of in the application layer, in particular, companies trying to, kind of, okay, they charge $1 for a particular service and end up paying $2 or $3 in terms of compute capacity to generate that output. Negative gross margins, never a good story.
Yeah.
Things are going to end badly. So yeah, I mean, I think in the world of technology, when it comes to transformational technologies like AI, like the internet, narratives rules, and that's a lot of what's going on right now. But you never want to lose sight of that Warren Buffett style discipline, because that it's like gravity. Everything falls. The only thing you can hang your head on, the only thing that can sustain you is cash flow. The expression, I still remember this. I was 21 at the time when I went to the Wharton School, and it was Professor Knudsen who taught me this my first finance class. And the expression he would use is dollars you can buy beer with, right? I mean, this is it. You have to come back to cash flows. Dollars you can buy beer with. That's the only thing that matters.
It's so funny you mentioned dollars you could buy beer with. My chief operating officer and colleague, Connor O'Callahan, went to Penn for his undergrad, and he was just talking about Smokes, the bar there that students would often go to.
Smoky Joe's.
Smoky
That's the
Joe's,
one.
yeah.
Yeah.
So he was just talking about Smoky Joe's. He said they also used to go to the Blarney Stone back in the day, but he said he just found out Blarney Stone went out of business. And so I think he might be putting together a bid at some point to bring the Blarney Stone back, because to your point, kids do need cash because they do want to buy beer.
Yeah, exactly. Yeah.
Let's see. So, when you bought ARM, I think the other thing that's very informative about your story in the ARM acquisition is, ARM was its own animal. It was really a national champion, which made it a very interesting transaction. You talk about hiring Simon Robey, and can you kind of comment on the structure of UK banking and deal making like this? Because Simon, in some respects, was your banker, but in many respects, he was your social concierge, if that makes sense.
Yeah, I think social concierge may be exaggerating it. He was a M&A advisor. He was also kind of de facto I think you might say he was our lobbyist. I think that might be a more accurate way of describing it. In many respects, what we went through is probably not that dissimilar to what people have to go through in the United States. I think it's a little bit less complicated. In the UK, I think it's a lot more transparent, and we were fortunate in as much as the ARM deal was done right at the time of Brexit. And we were able to package the story to the powers that be, to the government, all the way to the prime minister, that, look, I mean, I think politically, yes, it's a national champion, but you could position this as a vote of confidence in an iconic British company. We have a $34 billion investment into this company, UK company. And what they did, I thought, was quite clever. We would there weren't any. I think that deal would be that deal actually would be impossible to get done today because there's so much of a sensitivity around AI
Yeah,
from a national security perspective. But at the time, they extracted very sensibly concessions out of us, concessions that I think is the right set of issues for a government to focus on, which is employment, for example. We committed that we would double headcount within 5 years. That is SoftBank, and SoftBank exceeded that commitment, by the way. And that was a commitment that Grant Thornton auditing firm would come and audit to make sure that we stuck with it.
sure.
So we got a deal with them, and kind of in very similar fashion to what's going on in the United States right now, which is you got to kind of go in there and negotiate and see what works for the powers that be.
Hey, I want to give a big shout out to everyone who's been working so hard on this show. We recently hit the top 10 in investing podcasts on Apple Podcasts and even number 1 in the business category in several countries. As you may know, this show is brought to you by Smead Capital Management. Smead Capital Management understands how frustrating and illogical the stock market can be. If you're searching for funds with a proven track record, give the Smead funds a look. Or better yet, reach out at smeadcap.com. And don't forget to mention you're a fan of the podcast. Past performance is not indicative of future results. Investing involves risks, including loss of principal. Please refer to the prospectus for important information about the investment company, including objectives, risks, charges, and expenses. Read and consider it carefully before investing. Smead Funds distributed by Smead Funds Distributors, LLC, not affiliated. You talked a lot about the Vision Fund, and I think the Vision Fund really it typified the idea of crazy. You talked about obviously the backers that were involved, like MBS was highly involved in the Vision Fund from a capital perspective. You told great story around other VCs just being really frustrated with the Vision Fund because ultimately they didn't have obscene amounts of capital like this, and therefore too much capital can ruin the stew, if you will. Was this just something that people had never seen before, and that was the real problem with it?
Yeah, I mean, let me just throw out. I think one statistic kind of tells all. The total volume of all venture investing in the United States in the year prior to the launch of the Vision Fund was 76 billion. Right? So the notion of a single fund coming along with 100 billion of firepower. Granted, it was a global fund; it wasn't
Yeah.
exclusively United States,
Yep.
but it's a tech fund. It was very clear the vast majority was going to go into the United States. I mean, that kind of puts it in perspective, right? I
Yeah.
mean, yeah, this was huge. Nobody in the Valley had funds greater than $1 billion. Kind of the marquee names, Andreessen Horowitz, Sequoia, Kleiner Perkins. The idea of $1 billion fund, let alone a multi-billion-dollar fund, was unheard of. So in that sense, Masayoshi Son, what he did was a game changer. I told the story of how we met with the CEO of Sequoia, and who came in skeptically, but the next big move was to go out and raise an $8 billion fund. The last fund, by the way, was $2 billion. So that was the SoftBank effect, and it was very real. And I think a little bit of what you see going on in the Valley, which is companies holding on, whether it's Stripe, OpenAI now, Anthropic, huge companies, but private companies holding out for much longer. This would have been unheard of 10, 15, 20 years ago. The idea of private companies being valued at $100 billion, SpaceX, many others.
Yeah, agree. The other thing too is, and obviously this was a very telling story, but Masa would meet these founders and he'd say, "Hey, we're going to give you $500 million." And it's not like the founder was asking or needed that much money. And you had a lot of cultural references. The other reason why I love the book, you reference Animal House in the book, for example. You like kind of a John Belushi moment is what you commented on. But you also mentioned The Godfather. And it's like a Godfather situation. If Masa Son comes to you and says, I'm giving you $500 million, well, it's an offer that you can't refuse. Like, there's no way you're going to be like, oh, I'm sorry, Masa, we don't need the money. You always will take that money because what's the downside?
Well, so it's actually not to get too kind of geeky, but since you're a finance guy, and I assume that a lot of your listeners are, let's kind of dive into that because founders don't. If you come to a founder and say, "I'll give you $1 billion," well, you do get diluted, right? And when a VC comes, it's always strings attached, and you want both seats, and you want negative controls, or even worse, right? But the beauty of Masa-san's offering, I mean, I give the example of this company called Oyo Rooms. And I talk about, this guy was not looking for capital, and Masa Son wanted to write a massive check. And he said, okay, minimal to no due diligence, right? I'm actually going to assign my voting rights to you, right? And by the way, since you're going to get diluted down, I'm going to give you warrants to protect you, right? I mean, so these offers from a founder's perspective, they truly were going back to somewhat cliched, but that whole Godfather kind of making an offer you can't refuse thing.
Yeah.
So yeah, I mean, his style of investing was very different from VCs who keep you on a really tight leash, who drip feed capital. You sit on your boards, watch every move you make. With Masa-san, it was like, I believe in the space, I believe in the technology, and most importantly, I believe in you, and I'm behind you, and I'm backing you. So go out and do what you need to do. I'm behind you all the way.
Well, to your point, the VCs tend to have more of an activist approach. To your point,
Absolutely.
They're like an activist operator in so many respects with these founders, which is very different, like you said, than what Masa's done.
Yeah, they're managing fiduciary money. They're managing other people's money, so they have to be.
The other line that you had that I think a lot about right now, just so you know, so I really appreciated. And I came across your book randomly. My colleague Will Keenan, his dad you guys might have ran into each other at Morgan Stanley, but your book came up randomly, and I thought, this seems like a fun read. And then so many things, your book, watching Masa's net worth go up 11 billion this year, it's like, wow, what a timely reason to read, this book. But yeah. you have Chuck Prince's famous quote, which is, it's a classic quote. He speaking back to the mid 2000s, he said, quote, "As long as the music is playing, you gotta get up and dance." End quote.
Absolutely.
Okay, now
FOMO. It's FOMO, right? I mean, every teenager will relate to that. It's FOMO.
Correct. And Chuck said that. Chuck obviously is no longer running a major bank because that didn't sustain for too long. A quick side note, I was out doing TV. I was there at a studio in New York, and there was I'll call it a really named person in our industry who was doing a TV spot. And we chatted briefly, and they're very much pitching the AI story. And they got on TV and they said, listen, here's the deal. It's 10 o'clock at night, and the party's going till 4 a.m, is what they said, okay?
Yeah,
Which is funny, but I'm sitting there as the person I am, and I'm like, but wait a second. Buffett said, when the clock strikes 12, it all goes back to pumpkins and mice, right? And I was thinking about like that and Chuck Prince. And I get the sense from you that you feel like the music's playing, and it's, obviously as long as it plays, like Prince said, it's fine. But the music always does stop at some point, and then we kind of have to sort out who was foolish and who was smart. Is that a fair way of looking at today's setup?
I mean, there's another, since we're talking about famous clients, probably my favorite Warren Buffett line is you never know who's swimming naked until the tide goes out, right?
Yeah.
So yeah, I mean, I think there's an element of that. The problem with bubbles is if you've been around as long as I have, you can generally spot bubbles. And I know we're in one. I know it's not as outrageous as the year 2000. But the damn thing is, nobody can call how big it's going to get and when it's going to burst.
Agree.
Right? And I tell this story in my book, and in some respects, it's a poignant story that you can't feel sorry for the guy because I still think he died a billionaire. And talk about Julian Robertson, right? So Julian Robertson correctly predicted that technology stocks, internet stocks, were in a bubble, but he did that in 1998.
Yeah.
And he went out of business in his Tiger fund, right, went out of business in March 2000 the March of the year 2000, and the bubble burst in May 2000. Right now, if he could have held on, he would have been a hero. But he
Yeah.
not only did he sit out, he actually went short the markets. And so a point being, you can't call the kind of the size or when a bubble bursts. It's just a complete bugs game. It's tough.
I agree. And to your point, I think that like the real principle I take away from the Julian Robertson story, and by the way, within 3 weeks, it was like, Oakmark pushed out their PM, Robert Sanborn, to bring in their now PM, Bill Nygren. They were a value shop that was, looking like an idiot. Robertson, quit, threw up his hands in disgust. And then George Vanderheiden was thrown out at Fidelity, all within like a 2 or 3 month stretch. So to your point, kind of one of those symptomatic things that happens in this era. To your point about Robertson, avoiding a bubble is vastly different than shorting a bubble, right? In other words, like you can just say, you know what, there's games that I can play and games I can't. I'm just not going to play that game, and I'm going to do something else with my capital because I don't think it's smart. But then again, to your point, it's impossible to predict shorting things because your time has to be pretty prescient, and that's very tough to do, as you're pointing out. So I think a lot about just avoiding bubble activities versus like trying to predict the timing of them. I think that's a way to lose a lot more money than being right about a bubble.
Oh yeah, I'll just, not to digress too much, but MicroStrategy. That's one I'd love to short. That to me is peak. It's peak insanity, right?
Oh man! By the way, listening to Jim Chano's comment on that on X all the time. And by the way, to your point, here's the other. If I want to get geeky on the numbers for a second, the other thing I think a lot about is I'll use Chanos. He's been talking a lot about balance sheet assumptions, and it's back to your kind of like the capital intensive idea. If you go out to a lot of these hyperscalers, they're saying that their NVIDIA chips are going to last 4 to 5 years. But then you talk to people in the industry and the use of these chips and the growth of the use, et cetera, they might be done in 2. And the difference between 2 and 4 years in investment, it means you'd have to double your investment over the period. And we're looking at some of these numbers that are, to your point earlier, they're off the charts in CapEx. Yeah. And therefore, it's kind of like, do we just run out of cash?
Yeah. Well, the only good thing is the biggest checks are being written by people who can afford to write them. Right?
It's equity. It's equity, to your point. It's equity money right now.
Yeah. It is. It's not just, it's Microsoft, it's Google, it's Meta, massive cash flow engines, right? Which are, you might argue that Google's got, kind of could be the Google search engine, separate conversation, but still the cash generated power of these businesses is monumental. Their credit arguably is at least as good as the United States. So they can afford it. It's not like Global Crossing. They're not relying on the junk bond market to finance these build-outs. That's the good news.
I agree. And I always liken it to, it makes me think a lot about the fracking boom of the 2010s. Those were low return businesses, which are oil companies, and they had to borrow money and they're not as creditworthy. So now it didn't end well there either. But the point is that, I always tell people, listen, you're competing against yourself. So if you produce low returns, cash returns in the end, it's not good for your investors. And if you ever have to borrow money, it can add a lot of cyclicality to a business too. Let's see. The other thing I think I want to touch on before we finish, to go back to my notes here. Let's see if I had anything else. Oh, really quick. You went to Colorado to go see the Malone team and talk to Charter as a potential candidate to get involved with Sprint. What was your interaction with their team? Were they just doing that to pay lip service, or did you walk away with just because Masa really respected Malone, which I thought was interesting because most people don't put Masa and Malone in the same camp, but they were real visionaries in what they did.
Yeah, so this is actually interesting. So Masa respected Malone. This gets back to something I said earlier. Masa is a financial engineer. Mm-hmm. And John Malone is a visionary, clearly, in terms of what he's done with cable, but he is also a brilliant, even masterful financial engineer, right? Everything he does as a clever tax angle. He uses, kind of tracking stocks, for example,
Yep.
kind of a lot of financial, I won't call it trickery, but certainly very clever engineering. And that's a lot of what he does. He uses the high yield market, Charter, Liberty, all kind
Yep.
of high yield, aggressive uses of the high yield market. So that's part of the reason Masa really respected him. I don't believe that John Malone was playing us, or that Liberty was playing us. What they did was extract a brilliant deal for themselves, which you'd expect a deal maker of the caliber of John Malone to do, which
Yeah.
is, they own 30% of Charter Communications, and they said, okay, you want us to play with you. You need to give us downside protection, but not downside protection at today's level. Stock was trading in the 300s. They said, we want downside protection at $800 5 years in the future, right? So
Wow.
they wanted Son, they wanted SoftBank to guarantee a minimum share price of 800 5 years down the road in return for, okay, we'll roll over our stock and we'll support your bid. So they extracted their pound of flesh. I mean, in the end, this is all theoretical, and we can talk about this quite openly. Well, the company certainly did. It was reported on CNBC. Deal never happened because
Yeah.
the management team, the Charter management team, had a view that they really didn't want this merger. They had enough on their hands dealing with their merger with Time Warner Cable, which they'd done a year before.
Yeah, you mentioned David Faber, who has a very unique relationship with the Malone entities over the years from a media
indeed.
perspective.
Yeah.
Let's see, there's a lot we didn't talk about. Some things that I didn't ask you what your favorite golf tracks were. We didn't talk more about you eating at various Michael Mina restaurants, which I may or may have not attended in the past. You also got Clark Gable's mustache into the book, which all those things, I'm just like, gosh, this guy is so interesting. He's so enjoyable to read. But I want to just throw it out to you. Like, what else do you think should be mentioned in the discussion, or what would our listeners, what's a story that maybe wasn't in your book that you think is interesting?
Well, I think the stuff that it's an honest book and it's a complete book. So I think most of what's interesting is in there. The one thing we perhaps haven't talked about, and I think it's very interesting to unpack, I think particularly for the 20 or 30 somethings in the audience, is, what do I mean by the money trap? Like, what does that mean? And one of the reviews I've got had many interesting reviews, but one of the more interesting ones was from The Economist. And I say that not because it was a rave review or anything like that, but The Economist made a very perceptive comment, which is the book is a Rorschach test for readers. In other words, what you take away says a lot about you, the reader. Right? So you could read this book and you could come away saying, wow, this world of flying private, kind of glamorous, doing deals, multi-billion dollar deals, meeting with John Malone, heads of state. This is cool. I want to be like this. But equally, you could read this book and says, man, this is really shallow. Right? I think the word the Economist used is this kind of vacuous pursuit of money. And there's enough ammunition for both in the book, right?
Yeah.
And I think the idea of a money trap is an important one because, it would be horribly hypocritical for me to sit here and tell you, as kind of being an investment banker and being by most standards wealthy at this point in my life, to say that money doesn't matter. I mean, that's like, a classic, only rich people say that. That's a stupid thing to say. Of course, money matters. But but I think part of what I'm trying to say is at some point it can become a trap, right? And there probably will be openings, periods of change, periods of upheaval. It could be the equivalent of 2008. It could be something that happens in your personal life. In my case, it was losing both my parents, losing my dog within a compressed period of time. And when things like that happen, look back and treat that as an opportunity to re-examine your life. Do you want to keep playing? How much is that extra million going to mean? Right.
Yeah.
I mean, so that's a little bit of what I was trying to say through that book. I don't believe in messages. I let readers take away their own, which is why the Economist comment is so interesting. But I think it's sort of important for completeness sake, to talk a little bit about that too.
Well, and that's a very UK way of looking at things, is what The Economist is saying. That's a very, I've seen that a lot in their culture there. I'm going to give you my crack at it in my closing here, Alok. Your book, The Money Trap, reminds me that life has seasons to it where your opportunities and work can vary greatly. They can carry their own sweet fragrance that you can never catch a whiff of again, but they are trapped in your experiences. Yours as a banker, an intellectual, a deal maker, a husband, and a son rings really clear in my ears. Our listeners should go out and buy a copy of The Money Trap today. If you enjoy this podcast, go to Apple, Spotify, YouTube, or wherever you listen to A Book with Legs. Give us a review. Tell others about the books and the great authors like Alok that we have the opportunity to understand and study the world with and through. For our tribe, if you have a great book that you'd like to recommend, email podcast@smeadcap.com. That's podcast@smeadcap.com. You can also send your suggestions to us on X. Our handle is @SmeadCap. Thank you for joining us for A Book with Legs podcast. We look forward to the next episode.
Thank you for listening to A Book with Legs, a podcast brought to you by Smead Capital Management. The material provided in this podcast is for informational use only and should not be construed as investment advice. You can learn more about Smead Capital Management and its products at smeadcap.com or by calling your financial advisor.